Hey everybody, my name's Ket Makwana. I'm an entrepreneur and business influencer, and welcome to my session on the future of finance on Crypto Explained. So over the next sort of 35 minutes, I aim to give you a little bit more information about the world of crypto, how it actually works, and more importantly, some of the information about how it will impact you when it comes to things like tax. Remember, if you've got any questions, feel free to put them into the function or the chat function that you have right now, and I'll take them at the end of the presentation. Now, crypto, you've all heard of it. It's something that's now a part of our life and livelihoods these days. You've probably either dabbled in it, you've heard of it, not dabbled in it, want to dabble in it, don't know what's going on, etc. That's quite okay. What I'm hoping is the next 35 minutes, I can demystify a few things, share a few insights, and get you on to understanding what this actually is in a little bit more detail. So, what is cryptocurrencies? Well, it's a form of technology. It's the frontier now of what I call the frontier of virtual and digital currency. It's the future of the way in which we will pay for goods and services, receive our incomes, etc. I'm not saying it's the be all and end all. It's the future of. Now, if we go back to about 2 years ago when the pandemic was kicking off, etc., certain calculations and researches were done, and the global market size for a cryptocurrency was estimated around about $1.4 billion, which is pretty good, pretty big. It is actually a $1 trillion market, but that's kind of exaggerated in different areas and fields. What's interesting is by the end of the decade, or the turn of the decade to 2030, the compound growth of cryptocurrency and its value, market size, will go up to just under 5 billion. So it's got a very healthy compound growth factor to be considered with. Now, I'm going to run through a little bit of a potted history for those of you who don't really know what this is. And quite quickly to tell you, crypto is not something that was invented in the last 10 years and introduced over the last 5 years. It's only coming into your radar right now, primarily because of the way that media and people talk about it on social media platforms, etc. But it can date back all the way to 1983 when a cryptographer, David Shaw, conceived an anonymous cryptographic electronic money, which he went on to call eCash, turned into DigiCash. This turned into a piece of software which allowed the banking system to create digital withdrawals from accounts. So cryptography is actually already within the system, the banking system they have. So when you do a bank transfer using your app, your banking app, it's using cryptography to do it. By 1996, there was a push from the National Security Agency to publish a paper on how to make a mint, basically understanding what cryptography and anonymous electronic cash can do within the sort of financial transactions industry. Further this down, these studies started to enhance and more effort was put into it. Software engineers, Weedai, and then later on Nick Szabo also had their own kind of play on this, by giving this type of transaction its own type of descriptions. Come by up to 2008, we'd hit the global economic recession, which had ramifications and vibrations all over the world. One of the most important things to factor in at this point was the destabilization of centralized finance. The fact that there were institutions that are too big to fail that had to be bailed out. And, the masses of loss of money drew one technology and software engineer, a guy called Satoshi Nakamoto, to publish a white paper discussing the future of finance through decentralization. What it was generally talking about is creating a marketplace where you're not held accountable to certain regulations, you're not governed, you're free to trade in a way which doesn't kind of take away from you in terms of your profitability, but at the same time offers this new world of digital and technology sort of payments. So Bitcoin, as you probably have all heard of, was introduced or launched into the market in 2009. This is the very first coin, token or currency that sits in the decentralized finance platform and market. It was then later adopted on into other variations or altcoins, alternative coins, Namecoin and then Litecoin. And by around about 2015, Ethereum was launched, which took the whole blockchain technology to the next level. In Ethereum, essentially, the technology was to introduce smart contracts. So these are digital coded contracts between two entities that allowed for these kind of transactions to take place. And this was the birth of I guess what created all of these kind of wallets, these exchanges and everything that sits in today. Ethereum is also at the center of the buying and selling of NFTs as well, so non-fungible tokens. If you're into those types of things, which are current collectibles of digital art, you must acquire with Ethereum, you must sell and collect Ethereum. So essentially, this is a kind of a potted history, just to tell you that, look, we've been looking at all of these kind of things for the last 40 years. Can you imagine what the next 40 years are going to be bringing? So the profile of cryptocurrencies has really risen. So as I said, this is something that you've probably heard of either in the news, you've seen something on Facebook, someone's posted something on Instagram, Twitter, you've maybe read about it on LinkedIn. Essentially, you've got heaps and heaps of gazettes and editorials now and magazines and online news coming on around crypto and assets. So the profile of crypto is gathering momentum. Now, in a study that was done with the FCA, the Financial Conduct Authority, nearly 80% of adults said that they have heard or are familiar with what cryptocurrencies is. But what's shocking is that 73% of that have a decline in understanding. They don't really know what it is or how it works, how to get into it, how to get out of it, where it goes. I've been having conversations with all sorts of people, even the back end team here, basically, about crypto. And, there is this whole thing of, I know what it is, but I kind of don't know what it is. And that's the problem. That's the problem that we currently have in today's market. So let me put some context into this for you. Estimated over 114 million, and this number is growing. According to crypto.com, 114 million people around the world hold a cryptocurrency. And they hold that, and the way that they can identify that is through crypto wallets. So understanding an individual and the wallet, they can be able to create a counter. But this is going up on a daily occurrence. They've got more and more people opening wallets up every single day. What if I was to say to you that 5% of the UK population currently holds cryptocurrency and has a wallet? That's 3.3 million people today have a crypto wallet here in the UK. It kind of begs belief that, there is so much of this going on at this moment in time. And the danger point of it is that so many people don't really even know what it is or what they're doing with it. The US currently is the leading country when it comes to the highest volume of wallets and crypto holders, but they also have increased and taken over China when it comes to mining networks and other crypto assets itself. Now there are calls for the amount of energy and utility it takes to actually mine for coins and stuff, but today's conversation is not about that. It's just to put a perspective into saying that we are fast moving into a culture of adopting crypto assets into our world. So it's something that you're going to have to become familiar with or have at least a certain level of understanding, because some level of engagement will come in the next 3 to 5 years for you. The sophistication level right now for the average crypto investor is really, really low. Less than 1% of investors in this market really know what they're doing or talking about. This is why I'm going to say it to you right now out there. I'm not a crypto expert. I'm a crypto enthusiast. Very different thing. There aren't really any experts out there in the market at the moment because we are still entering uncharted waters with blockchain technology. We're like at the birth of the internet. It's still so many things that need to be discovered, understood. There's going to be losses, gains, etc. So don't be sucked into anything where someone says, I'm a crypto expert. They're not an expert, they're an enthusiast. It's a very big different thing. But the boom in this whole thing, where people being sucked into the stories of fast profit, quick, turning into internet millionaires and stuff like that, online millionaires, etc., has brought this whole thing where people are driven by the prospect of profitability, and being undone by ignorance, because they don't really know what they're doing. They're falling into things like scams, fraud, etc. There was a report that came out the tail end of last year that suggested that almost $14 billion worth of crypto assets was stolen through either fraud or scams in that year alone. 1 year, 14 billion. Not to mention things like, you know, the stories going around Korea or South Korea or North Korea, as it is, talking about $400 million of that crypto assets that have been stolen as well. But we're not here to talk about fraud and scam. This is something that you're going to hear a lot about as you go through the whole process of this, because, you know, at the end of the day, we have to see both sides of the coin. We are in an environment where we're edging into a world where we're not entirely sure what to expect. So as much as there's excitement, there's also going to be vulnerability. And it's important that what you're doing, if you are going to be engaged in this world, that you have a level and sense of understanding and competency. And if you don't, go and seek guidance, advice, go and find more education. There are tons of white papers out there, lots of studies, lots of reports. Try and stay away from what the media speculates on. Media is always there to drive out the bad news in things, etc. They'll hype it up and then kill it down. That's what sells papers, etc. Coming back to the presentation at hand, crypto assets and taxation. This is the golden goose, as it is, I guess. This is the meaty bit of the presentation. So I'm gonna just talk you through some stuff. There is a little bit of technicality in here, so I hope you don't mind that I will go into some details there. But if you have any questions, get them into that function that you have. And as I said, I'll take and answer all questions at the end of this presentation. So HMRC, our UK inland revenue, should I say, basically, suggests that if you buy and dispose of cryptocurrency as a personal investment, you will pay capital gains tax on the profits that you make. HMRC refers to crypto units as tokens, using these tokens to pay for goods and services. So what I'm about to share with you is an overview of how the UK sees cryptos to be taxed, and some general regulations that have been put into place. Before I go there, I just want to introduce to you the concept of what the financial or the Minister of Finance has introduced in India. India have decided that they're going to do three key things. They created a 30% tax on crypto assets. So it means that whether you're a business or an individual, if you have a crypto wallet and you have assets, you're liable to up to 30% tax on the asset in there. They've also created a 1% tax levy on the TDS, which is the direct source. So it's a tax on the direct source. So when you actually make that transaction, there'll be a 1% tax levy that will be added there as well. Now, on this side, what does this do? It's a heavy levy. It's a heavy tax. It's quite excessive, and it can almost outcompete them in the crypto market. So, you know, Indian investors may not want to put so much into crypto because of the taxing, but it creates this income from the tax. The tax income will allow for stimulus into other parts of the economy, into health, into property or homes, or into poverty, etc. So taxing crypto is a good thing, you know, if it's done in the right way. The other thing that they've introduced is a digital currency called the digital rupee. Now, this in the world is going to be known as a CBDC. Okay, so CBDC stands for Centralized Bank Digital Coin or Currency. So essentially what it is they're moving away from just the actual paper or physical rupee that you would have, the cash, the pound, the euro, whatever you want to call it, the dollar, and they're replacing it with a digital currency version. Now, this boosts the digital economy. It will increase the amount of digital payments and transactions that can happen between individual to individual, or people from people to business and business to business. It will also reduce the amount of paper administration that needs to be done, and it will allow the government to start to tap into more areas like fraud, you know, and evasion, for example, because everything is now going to be digitally recorded as opposed to paper recorded. It's a little bit like how in the UK we have Making Tax Digital, the MTD. It's there to actually help speed up the process, make taxation a lot easier to swallow, but also to weed out any kind of tax evasion that's or fraud that's going on at this moment in time. So essentially, when you're looking at crypto assets, there are two ways to look at this. You can either look at it from a personal investment perspective, or you can look at it as a business. Now, I'm not going to read all of the points within this kind of slide, but there is an asset manual that HMRC have released. It was released on the response to a review to the report that was published in 2018. That review took place in 2021, and the regulations from that review, the regulations and taxation decision for the UK was made. Essentially, what's happening is crypto assets are now starting to be seen as just like any other physical asset that you could have within your portfolio. So whether it's a property, whether it's stocks, any type of asset of this particular nature. If it's creating an income for you, you're going to be subject to income tax. You're going to be subject to capital gains when you sell the asset, on the profit. If you are looking to produce this as a part of your wealth program to your future, it could incur inheritance taxes. So let me just talk you through this really quickly. HMRC refer to crypto as coins, tokens, and currency itself. Okay, so the crypto asset for individuals and which tax applies on, really most of this is going to be around capital gains, because what it is you are creating a portfolio of investment, and if that investment matures and you exit or dispose at a point of maturity, the profit that you made from the point of entry to the point of maturity and exit is going to be liable for capital gains. Okay, you're going to have to at some point start to introduce this as income that you've earned in your self-assessments, for example, and for that, if you as an individual receive crypto payments, in a way as part payment for your services or full payment for your services. So if your employer decides to move away from fiat currency and start paying you in Bitcoin, for example, you could be liable for income tax and national insurance contributions on that as well. So essentially what this is telling us is that you can go about your own way. There's nothing illegal about having a crypto asset, buying Bitcoin or Ethereum or any other altcoin, having an NFT. There's nothing illegal about it. All it's saying to you is that you have to declare it at some point, and you are going to be taxed based on the value of that asset at the point of taxation. So as I said, personal income, the way in which crypto assets actually operate and work in the UK on taxation through things like capital gain tax or income tax, depending on how you receive this. Outside of receiving your crypto assets, there are certain things that you've also got to take into consideration. So many assets aren't actually bought and sold in terms of you purchase and then just sell back to an exchange. You may actually trade that for another currency in the market itself. So you may go from Bitcoin, for example, to Ethereum. Now, it's also kind of suggested that what you have got to be able to do is declare that you made that transaction, and not when it's not using a pound sterling valuation. Essentially, what HMRC recommend is that you liaise with the shares, assets and valuation body or committee. For you personal individuals out there that do your own self-assessment, just understand that this is a body that's there to give you an average or aggregate value of the asset that you have. Because there is so much veracity and volatility in Bitcoin and Ethereum pricing, it's very hard to pinpoint exactly how much the value of that asset is at a particular point in time to then be able to tax you upon it. So small things like exchanging or trading coins, or working with different exchanges, and what I mean by that is different currencies, fiat currencies. There's an example of FTX, started up by a 20-something, where he was acquiring Bitcoin on the exchange markets in the US on US dollar, but then immediately selling into the Japanese market under yen for a automatic $1,000 profit per coin. So when you've got something like that where you don't have a pound sterling value, exchange rates must be established, a valuation must be established as well. So it's important just to understand here, you're not doing anything illegal, you're not doing anything that's out of bounds, but understand that you're going to be taxed on it the same way you were taxed on a property, the income that you generate off a second property or a buy-to-let scheme that you have, etc., or capital gains for purchasing and then flipping a property where you flipped it for a profit. The profit is then subject to capital gains tax itself. Okay, so this is kind of the individual sphere of what goes on when we're looking at taxation of crypto assets. If you're a business doing this, it's pretty much business as usual as well. So what the government are trying to do here, or what I understand of it at this moment in time, and by the way, let me just kind of re-emphasize that all the information I'm providing you here is coming directly from the HMRC website and the crypto asset manual. There isn't anything in there that constitutes advice that I'm giving. It's purely guidance and education. I'm trying to help you lift out the most important information that's relevant to you to help you understand how it works. When we talk about businesses, business taxation works on the way of profit and loss. It works around things like corporation tax on chargeable gains, VAT. All of this kind of sits the same. So if you are introducing crypto assets into your business, whether you're looking at it as a form of payment for services or looking to pay others for their services from a B2B or a B2C or a C2B type of positioning, activities like buying and selling exchange tokens, so this is your Bitcoin, your Ethereum, your Litecoins, your altcoins, all of these kind of things, exchanging tokens for other assets. That's where someone either pays you in Bitcoin and you give them a transfer of service or product, or vice versa. We do this at Enterprise Lab, one of my companies. Mining, so if you're a company that's mining for coins or providing goods or services in return for exchange of tokens, you are going to be subject to some form of taxation on those assets. Again, the same rules apply. SAV comes in, gives an average valuation for the asset, but the amount of tax the business must pay will depend on the income, expenditure, profits and gains. So naturally, in the UK, you would have typically paid 20% corporation tax on the profit that your business has generated at the end of the financial year. The crypto asset will be contained within that profit and loss, and you will be taxed accordingly to that. Again, corporation tax on any chargeable gains as well. That runs essentially the same way as which the current business taxation policies run themselves. So look, just to summarize on that point very, very quickly, the headline things here is that it's not illegal to have crypto assets. You're not doing anything wrong. Crypto assets are becoming more and more regulated, and more regulation will come in as financial institutions, the governments can become more confident and competent about the exposures, the opportunities, etc. There is going to be taxation, but each country holds, and each Minister of Finance or Chancellor will determine what the taxation policy will be. So if you're kind of taking all of this information in and you're not from the UK, it's important that you go back and research a little bit around the tax policies in your own country. India have got a flat rate 30%, irrespective of who you are, what you are in crypto assets, whereas the UK is aligning the asset in and falling it into the same current tax policies that it already has. So don't be fooled to think that the government are not taxing, and don't go into this kind of chat where it's better for you to brush everything under the carpet. It's important that if you are in this game, that you declare what you're doing. It's probably in your favor to do that. And again, this isn't guiding as advice. This is just purely an opinion that I'm saying, primarily because the way in which you're taxed and how you're taxed is probably favorable to you right now. If the government decides to change this and lobbies for it to be more a flat rate tax, it could cost you even more. So, and don't forget, once investigations happen into individuals or businesses from the HMRC, they can go back as far as 5 years and ask to reclaim unpaid taxes and duties from that perspective. So just don't get yourself into the bother. Go and understand how taxation works and be open with what you're doing. That's the best way to go around this. So I'm going to wrap up the session today. I really appreciate the time that you've spent with me. I hope I haven't gone too fast, too quick in particular areas or too deep and technical in others. I'm really looking forward to picking up on these questions that you have. So get them in while we move to Q&A. If you want to get in touch with me, my details are on the slide right there. But again, thanks a lot for your attention, and I look forward to answering your questions.